So why is right now the best time you're going to see to buy a home in the next few years? If you want to find out, stick around through the rest of this video and I'll get into it. Good morning. My name is Adam Kahn and I'm the Rational Investor. Today is the day after Thanksgiving. Happy day after Thanksgiving. I hope you're all doing well. Hope you got to spend some nice family time. I'm out here in Northern California visiting my wife's family. I love it out here. A little bit chillier than Vegas, but it's beautiful. Got some great, different colors in the trees and stuff. It reminds me, I grew up in New York. It kind of reminds me of that. Look at how pretty it is out here. Anyway, that being said, I'll get into why I think right now is the best time to be buying a home. I know there are tons of you who disagree with me, so feel free to chime in and tell me why. But before I get into that, if you haven't already, do me a favor, hit the subscribe button, hit the like button. That helps YouTube's algorithm. If you like the content, it helps other people find me as well. I'm also going to put a couple links in the description. They allow you to open an account at SoFi, which I use myself as well. If you deposit $10 or more in that account, they're going to give you a free $25 gift. And I think if you do direct deposit and some other stuff, they'll give you up to $250. You have to look into it to see exactly what they offer. I appreciate you doing that. It also gives me a small gift in an account that I open with my son. He's 13 years old, or will be in 2 days, and he gets really excited about it, and it allows me to help teach him about these things because I try to teach him about finance as well and get him involved, which is super cool and fun for me. I'm sure he doesn't always listen since I'm his dad, but hopefully some of it gets through. So, why do I think right now is the best time to be buying a home? When prices are high, interest rates are high, seems like it's slowed down a whole lot. People are really worried about another big crash like 2008. Um, I just see it differently this time. And for those of you who believe me or not, I saw it in 2008. I sold all my property in 2005, moved out to Las Vegas, and we rented until 2008. And when the collapse came around, we started buying properties again. I thought it was over leveraged and out of control. This time is different, in my opinion. Now, it's just my opinion. You guys have to do your own research and make your own decisions on this stuff. Because I get it. The prices are high, rates are high. Doesn't necessarily make sense to a lot of people. But what I see is different. The main factor is the loans and the leverage that's out there. But then on top of it, the inflation that we just had is a real thing, and the lack of inventory is there for a reason. You know, it, you're not going to have the same amount of default. The commercial real estate's going to play out differently. And what everybody learned from 2008 helps them to prepare if there was something like that, which is another reason it won't happen. So now, since then, I've gotten into mortgage lending, and I'm a loan officer as well. But I get comments sometimes that, well, then you're saying it because it's self-serving. And I can tell you that nothing would be better for my business than a big collapse. If the prices fell and the rates came down, I'd get real busy at work again. And right now, we're kind of slow because things have slowed a good bit. But the people who still get approved and are buying homes, they qualify, and they qualify well. So why would they default? When you have doctors and lawyers and people with good incomes and secure jobs and 20% down and good credit as the ones buying homes, unless the Fed pushes so far that we have huge unemployment and those people end up getting out of work, there's just no reason they won't be able to afford their bills. The other thing is, if you go to the CME Fed Watch, which is just on CME.com, and you can play around a little bit there to see, becomes pretty obvious that the markets seem to think we're going to start seeing cuts in the rates soon. The Fed raised rates so fast, so high, they have plenty of room to cut to support the market if it really starts to collapse or starts to fall too quickly. Their goal isn't to start a collapse. Their goal is to slow down the economy, which they have. And now, if they see the housing really start to correct, there's no reason they wouldn't have room to kind of slow that down. So, what I'm seeing is a market that's corrected a bit. Sellers that have been on the market for 20, 30 days that are getting panicked and aren't used to how the market used to be when you might sit on there for 3, 4, 5 months. So they're getting panicked because this is the slow time of year. People get distracted with Thanksgiving, look at me, Christmas, Hanukkah. This time of year there's a lot going on, and shopping for presents for family. Once the new year passes, come February, March, or April, when the election is more in focus, people start looking at homes again. I just think you'll be in a different situation. So if you can find a seller who's panicked, lowers their price too much, I think it's a good opportunity. I don't think it's a crashing market. I think what you'll see is once people get shaken out a bit and the rates come down and the buyers come back in and not a whole ton more inventory come to the market like people are expecting, touting about Airbnbs and all these other things where they're in big trouble. Well, a lot of them have just gone to Facebook Marketplace or VRBO or other places because they still want to rent their house and they figure they'll do it. Well, I just don't see that being a huge amount of inventory to hit the market to make it crash. And even if it does, the people aren't in the same situation where they're upside down a ton. And remember those old loans. Not only were they upside down a ton, their loans were seasoning where they had to switch from a minimum payment to a fully amortized payment, and you might have seen your payment quadruple. So if you were paying $800 a month and all of a sudden now you have to pay $3,200 and your house has gone down in value, that's a much different situation than you have a good interest rate, you have some equity, and the market slowed down a bit. Totally different. No reason for a collapse. And then when the Fed starts cutting rates to sustain things, well, I figure the market catches itself. And if you want to look at the commercial side, what they have going on as these rents are rolling and as they're having to figure it out, the banks don't want these properties. So they're letting people extend for 6 months or a year at their current deal. So if they finance things when rates were at the bottom, the banks are just giving them an extension until things change and they can figure it out. They don't want to foreclose. They don't want those properties. So as long as people are keeping up with their payments, they're just moving along the way it was. Why would that change? What's going to make it where they're just going to decide they want $1 trillion worth of property that they don't know what to do with? So while everybody's sitting there gloom and doom talking about the big collapse that's coming, and people decide to sit on the sidelines and not get something, I think they're going to hurt themselves and they're going to regret it in time. Again, you need to do your own research, make your own decisions. I wouldn't just listen to me, but really, I don't want nothing less than a crash, too. I just don't see it coming. So I'll keep it short. I'm going to head back to the house, hang out with the family. But again, before I forget, give a like, give a thumbs up, make some comments. I'm happy to discuss it. Tell me where I'm wrong. And one last thing before I call it a day. A lot of people talk about the FOMO in the housing market. Well, my thought is you better get a little fear of missing out before you're left in the dust. To me, it's that simple.